Then we started with chapter number 1, that is on quality control. And we studied different types of standards. So standards can be divided into two parts: engagement standards and standards on quality control. Engagement standards can be further divided into two parts: assurance services and other services. So if you want to perform different type of engagement standards, and if the service involves confirming some information, commenting on reliability of information, it is assurance services. Now, where same kind of skills and knowledge is required, but not assurance, it is called other services. If you want to audit of historical information, that is nothing but financial information coming from books of accounts, then standards on auditing need to be applied. If you want to do review, that means doing change in short, in less time and less procedures, review of historical information, then SRE is applicable. If you want to audit or review of information which is other than historical, that means futuristic or charts maybe, then you have to apply SAE, standards on assurance engagement. If you want to do related services, then SRS, standards on related services. To maintain quality of all assurance and related services, to maintain quality of all the type of assignments, we have SQC1. So SQC1 is 1 to 99, SAS is 100 to 999, SRE is 2000 to 2699, and then SAE 3000 to 3699, SRS 4000 to 4699. So first case is very simple. It's not a case, it's a situation where Jagriti is facing a lot of workload in the CA firm. A lot of work is there. They are growing rapidly, taking more and more work, and because of that, they are not able to deliver. They are not having enough people, enough time, enough infrastructure to follow things, and because of that, quality of work is deteriorating. Quality of report is deteriorating on continuous basis. So this is the problem. So basically, if they apply policies and procedures of SQC1 properly, they will be able to overcome this challenge. Now, next question is, what do you mean by quality? When it comes to quality for assurance and related assignment, it means two things: compliance and reporting. All the work should be as per law, rules, regulations, and professional standards. It should be as per law, rules, regulations, and professional standards. And next thing, reporting. And next thing, reporting should be appropriate. Reporting should be reliable. Reporting should be appropriate, reliable in the given circumstances. So when these two things happen, compliance and reporting, then we say that it's a quality work. Now, let's understand. So we know the quality is extremely important. Faith of the society on standard on audit report, and then thereby financial statement and companies, entities, depends on what is the quality of audit report. It involves two things: compliance and reporting. There are two standards, SQC1 and SA220. So SQC1 explains 6 elements, that if you have good policies and procedures for these 6 elements, then you will be able to form a quality control system with the help of which you will be able to maintain quality of all the assurance and related assignments. It's very simple. Form policy and procedure for 6 things. It will become a system of quality control that will ultimately maintain quality for different assignments. So it says what should be done at firm level, what kind of policy and procedure firm level. But when we talk about SA220, it talks about implementation at engagement level. How to implement quality control system at engagement level, how to maintain quality of individual engagement. That is engagement level controls, you can say, that is given by SA220. Apart from that, apart from these two, there are other standards on auditing, Companies Act, which again help in maintain the quality. There are people reviewing our work continuously to see whether quality work is done. So we have peer review controlled by CA Institute, then quality review board controlled by central government, NFRA controlled by central government, which continuously focuses, are we doing quality work? Introduction is very simple. SQC1 is applicable to all type of firms, whether individual, proprietor, or whether partnership firm. Let's see the 6 elements. 6 elements are Le Aya He Man. So that's the shortcut, Le Aya He Man. So L stand for leaders. Leaders are supposed to take responsibility to maintain the quality. They are the most experienced and powerful people. And So they should take the responsibility and they should behave in such a manner that people get encouraged, inspired. Then everyone in the firm is supposed to follow ethical requirements. That is nothing but 5 fundamental principles of ethics. 5 fundamental principles, we have seen that. Then A stand for be careful, accept and continue only those assignments where you feel you will be able to deliver quality. Next, H is for human resource, adequate staff with proper experience and qualification and training should be there to maintain the quality. After accepting work, there should be engagement performance. There should be proper engagement performance where systematically give directions, supervisions and review of the work. Finally, there should be continuous monitoring of the policies and procedures of the quality control system, so that it should be changed as per the changing circumstances. It is working effectively. Firm is supposed to document all these policies and procedures at one place and communicate to the employees, take their feedback, ask them to communicate their views about it. Then we spoke about leadership. The most important thing to maintain quality is to culture. There should be culture in the organization where quality is respected, encouraged and promoted. And leaders can do this. They can develop a culture. Where quality is respected. So CEO or managing partner should take responsibility to ensure that quality control systems are established and properly operational. Okay. Now, to achieve these things, they are supposed to do 3 things. They are supposed to prioritize. They are supposed to explain everyone in the firm that amongst our priority, quality is the most important factor. It is non-negotiable. It is important than the financials also. Revenue, profits, cost. It is more important than that. When they design management structure, when they have roles and responsibilities of managers and their policies, then performance should be evaluated on the basis of how good is the client selection, how good is the quality of work, what were the quality issues and so on. So apart from monetary targets, these targets should be given importance. And lastly, adequate resources should be allocated to develop this quality control system and implement it. So if we need a culture, leaders will take responsibility and they will do 3 things. They will prioritize, they will define management roles, responsibilities and policies properly. They will allocate resources to achieve these things. Then SQC talks about the next element, that is ethical requirement. So you can always put a standard statement that SQC 1 says that there should be policies. There should be policies and procedures for that particular element, like for ethical requirements, which ensure that work should be as per law, rules, regulations, professional and technical standards, and the end result report should be appropriate and reliable in the given circumstances. So you can write this standard statement everywhere. So put that statement first, that policies and procedures are required for fulfilling ethical requirements. Then next thing you explain is that what are these ethical principles? 5 ethical principles. We have a shortcut, CBI office will explain ethical. So C for the 2 C's. C for competence, professional competence and due care. C for confidentiality. Then B for behavior, professional behavior. I for integrity. O for objectivity. There should be policies and procedures to protect these 5 fundamental principles. Then next, talk about independence. Okay. So it's principally about 2 things, about ethical principles and then independence. Explain that when you are legally, personally, professionally not dependent, that's called independence, and independence is mandatory. It's required for all the assurance engagements. This independence, so there should be policies and procedures for independence. It should be communicated to everyone in the CA firm. Communicated, then everyone should be informed that they should communicate back any threats. They should identify, evaluate and communicate back any threats if firm members come to know about it, and then take appropriate action. They should also have a mechanism where engagement partners and other employees of the firm are able to share independence issues with the firm. And on annual basis, a declaration should be signed with respect to independence that across the year, the engagement partner and team members were independent. So first talk about the policies and procedures, then talk about fundamental principles, then talk about independence, and then what should be done with respect to independence, and finally the important thing, annual confirmation. So in numbering, we have divided into three parts. First policy and procedures, then fundamental principle, and then talk about independence. Next, we talk about, they are discussing familiarity threat. So explain a very simple thing. Familiarity threat is one of the threat which creates pressure on the professionals to compromise with the ethical principles and independence. And it simply means having long association or close relation which creates sympathy towards the client. So first explain what is familiarity threat, and then explain one should take safeguards. One should have safeguard steps to reduce this threat to acceptable level. Depending on the nature of the client, its public interest involved, and what is the length of service, we can have higher level of safeguards. So they talk about three types of safeguards. First, they talk about audit rotation. That they say that there should be a rotation policy where engagement partner is rotated, and in that policy, no engagement partner should continue after 7 years. After 7 years, engagement partner should be rotated. But if it's a sole proprietor, then it is not applicable. Next, apply mandatory review. If you apply mandatory review, again it is a safeguard, will reduce familiarity threat. And then you can have EQCR, engagement quality control review, where a non-team member comes and sees whether audit is performed properly. So talk about familiarity threat, talk about safeguards, and then explain three types of safeguards: auditor rotation, mandatory peer review, where the peer reviewers will be sent by peer review board to do the review of the audit firms. Are they following quality control systems? And then EQCR, non-team member comes and sees how audit is conducted. Then go ahead here from, let's talk about the next element, that to maintain quality, it's very important. Again, you can have standard statement. There should be policies and procedures for acceptance and continuance to ensure the work is done as per legal law, rules, regulations, and standards, and report is appropriate. Then you say that it's very important to check one thing: integrity of the promoters, management, TCWG. Evaluate its integrity, because audit is a collaborative activity. We show a lot of trust and dependency on what management says. Then next, two things about us: whether our team is having proper competence and capability to execute this particular engagement. Next, whether we'll be able to fulfill ethical requirements during our engagement. So one thing is with respect to client, and two things are with respect to us. Now, decision making, you should collect all the relevant information and explanation from the industry, from the team, and then you should take this particular decision. It should be properly documented. What were the issues involved? What kind of information was collected? What kind of safeguards were applied? And then whether we accepted or rejected, and the reasons for the same. Next, we talk about how to assess integrity of the client. So there's a shortcut, SARS integrity. SARS integrity. Okay. So S stand for understand scope. Understand whether there are any limitation of scope imposed by the management which shows that they're hiding something. And then legal issues. Are they involved in any illegal activity? So understand limitation of scopes and legality issues. Then A for what is the attitude? Are they having poor attitude towards accounting system, maintenance of account records, and preparation of financial statement? Are they careless about it? And fees. Are they trying to reduce the fees so that we apply less number of people and we won't be able to identify what they're hiding? So what is their attitude towards accounting and auditing, and what kind of fees are they trying to lower the fees? Okay. Then R stand for reasoning. Why they're being appointed? Are they being appointed only because they're new and small so that they can be pressurized and manipulated? So SIR's integrity, I stand for then identity and operations of management and TCWG. What kind of identity they have in market, in media, in the business circle, and operations. Is it operated by family or individual or family or professionals? And this understanding will improve over a period of time. So relationship will evolve. We will understand more and more about them. So these are the 4 things, and each point generally is covering 2 issues, 2 aspects. Then how to ensure that we are competent and capable of this particular issue. So there is a shortcut, reach deck. Reach deck is the shortcut. Reach deck is the shortcut. R stands for regulations. So are we having enough knowledge of the law, rules, regulation applicable to the client? Then deadline, whether we will be able to deliver the engagement, quality engagement till that particular deadline. Then expert, what kind of experts will be required in the engagement, and whether such experts are available and they're ready to work with us. Then capability of resources, what is the competence and capability of our team. Our team, are there sufficient number of team members, well qualified, experienced, knowledgeable, well trained, whether it will be execute the assignment. And then finally, what is the knowledge of the industry, how well you do know that the industry, their business process, their complexities, their risk, and how to handle them. Knowledge of the industry. Then next, so they're talking about one thing one by one. So for integrity, they spoke about it. For our competence, they spoke about it. Now ethical issues, conflict of interest. When a person plays multiple roles and these roles are contradicting with each other, that's called conflict of interest. So they're saying before accepting any assignment, you should see whether there's a conflict of interest and you should resolve it, and then only you should accept it. After accepting, you may come across a lot of new information and you may come across conflict of interest. In this situation, first do raw things. First, understand, are we supposed to report, inform about these conflict of interest to anyone, to appointing authorities, to regulatory authorities? Okay. And appropriate decision making, we should take into consider all information, we should do discussions, law, rules, regulations, standards, circumstances, and carefully take decision. And W, we may think about withdrawal. We may think about withdrawal. If we think that we will not able to deliver quality, we may think about withdrawal. And when we withdraw, we should inform people why we are withdrawing. So explain before accepting assignment, resolve conflict of interest. After accepting, you may get new information, and then you do 2 things. You do raw things, that is reporting about the conflict, appropriate decision making, and then withdrawal. Then there are guidelines for withdrawal. They are very simple, 4 things to be done. First, go and discuss with management, TCWG, what are the issues you are facing, what are the problems you are facing, see what input they are giving, what kind of response information they are giving. Then decide, sit, discuss with your team members, and others whether withdrawal is required. And if you plan to withdraw, then appropriate reasons, explain people why you are withdrawing. Also think, then reporting, think about it. Are you supposed to report external authorities, regulatory authorities, third parties about it? And then finally document everything. What were the challenges, what was the discussion, what was the reasons of withdrawal? Okay, so first discuss, then decide, then report if required to people, explain people why you are withdrawing, and then finally document the whole thing. Then we talk about human resource. So first again talk about policies and procedures. Policies and procedures should be there. Policies and procedures should be there to ensure that work is conducted as per law, rules, regulations, and technical and professional standards. Technical and professional standards. Then that report should be appropriate in the given circumstances. Then you start talking about it. PhD, that there should be personnel. There should be enough number of personnel with proper competence, knowledge, experience, training, and commitment to work properly. Then there should be policies and procedure for HR issues. There should be policies and procedures how recruitments will be done. After recruitments, how training will be done. Then how performance evaluation appraisal will be done. Then after that, how career development will be done. Then D for development, professional development. How recent updates, changes, legal, regulatory requirements and changes, and professional, all the legal changes and changes in standards will be explained to the staff. how they'll be trained in the professional development. So how recent changes in the profession will be educated to the existing staff, how they'll be trained about the recent changes. There should be policies and procedures with respect to professional development. Then the most important person is engagement partner. Most important person is engagement partner, who is going to influence a lot of things. When it comes to human resource, he is a very important part of the human resource. So they are explaining 6 things. Number 1, they should that firm should carefully assign an engagement partner for a particular engagement, keeping in mind what are the requirements of the engagement, what kind of knowledge, expertise, experience is required. Keeping that in mind, proper engagement partner should be allocated to proper assignment, who will be able to do the justice. Then it should be communicated to TCWG and management that so and so person is appointed as engagement partner. Then clear-cut roles and responsibilities of engagement partner. That listen, this is your ultimate objective. Whether financial as per applicable framework, whether you do true and fair view, you're supposed to make these reports and you're supposed to ensure that it is delivered with high quality on so and so dates. Clearly define his responsibility. Then allocate a proper team. Adequate number of experienced, knowledgeable, well-trained people should be given to them who will assist engagement partner to execute the assignment. Then there should be regular assessment, a regular performance assessment. Are these guys doing good planning? Are they doing good execution? Are they achieving their targets? Apart from the technical achievement, whether quality, apart from financial achievement, whether they are achieving quality also. So assess performance, assess quality commitment. Finally, regularly inform them what kind of improvements they need to bring in their audit process. Next, we talk about engagement performance. First, talk about steps. So when we talk about steps, there should be first direction. Proper direction should be given to the team members by the engagement partner and key members of the team. Then when team starts working, there should be continuous supervision. When they are stuck somewhere, there should be consultation and advisory. So consultants give advisory, they don't work. Experts work also. So consultation. When the junior's work is completed, senior should review it. And finally, before signing, in many assignment, EQCR, engagement quality control review is required. So engagement performance involves these steps. Talk about these steps. Then explain that consultation is extremely important in complicated high-risk areas where a specialized knowledge skill is required. You need consultant. Consultant can be within the firm, outside the firm, who give advisory services. Appropriate person should be selected. Person having adequate knowledge, skills, experience in that particular field should be appointed as consultant. Many times people go for the external consultant. It is absolutely fine. This can be asked in MCQ. And then you're supposed to document the whole engagement performance. So first we are talking about the steps, then we talk about the consultations. What is consultation, how person should be selected, and engagement, external resource can be there, documentation. Then as we go ahead, there's engagement quality control review. What is engagement quality control review? So it's a very simple thing. Engagement, when a person who is not part of the team, he comes and he evaluates whether the work is properly done, audit work is properly done, all significant judgments are properly taken as per quality control system. Then that process is called engagement quality control review. Okay. How in depth he will do the review will depends on complexity and risk involved. If it's a very complex assignment, a lot of risk are involved, engagement, the extent and depth of the EQCR will be on the higher side. Then next, it is mandatory for audit of all the listed entities. Apart from that, firm can have a criteria, turnover based criteria, profit based criteria, or other criteria to ensure that EQCR will be required here also. Then they want to clarify that even if EQCR is done, the ultimate responsibility with respect to quality of particular engagement lies with engagement partner. Though he may be assisted by reviewer, but ultimate responsibility will be his. His responsibility is not getting reduced anywhere. So explain 3 things. Explain first what is it and how extent about EQCR, then its applicability, and then finally responsibility is not getting affected. Now the next is what a reviewer should do when he goes for engagement quality control review of a listed entity, a listed company. So there are two ways of learning it. Let's see. In a logical sequence, if we see, first thing you see is, so a reviewer is going, imagine an audit team sitting in front of him, engagement partner. First thing, whether these guys were independent before they started the audit, okay, the independence. Then what are the significant risks they identified at the initial stage of the audit, whether it is properly addressed, proper procedures were performed for it. Then what significant judgments they made during the audit, whether they took proper consultation. Fourth point, proper consultation. Proper consultations were also taken. Then what were the misstatements which were identified and whether they were rectified or not. Finally, what communication was made to TCWG and regulatory authorities. And lastly, whether documentation is appropriate. So 7 things they have to see. You can study this with the help of a shortcut also. MICR in communication and documentation. So MICR, you know, it's a technology. So M is for misstatement, I is for independence, C is for consultations and also significant judgments, consultation and significant judgments. Then R is for risk, significant risk, C is for communication, D is for documentation. Then who can become engagement quality control reviewer? Number 1, he should not be a team member. He should not be a team member. He should not participate. He should not participate in performing the audit engagement. He should be member of the. He should be member of ICAI. He should be member of ICAI. He should be a chartered accountant. And then next, he can give consultation for sure. He can give consultation, but consultation should be limited. If he's doing significant contribution to the assignment, he's like becoming the team member, then substitution should happen. Either he should become a consultant and a separate engagement quality control reviewer should be appointed, or he should remain reviewer, a separate consultant should be appointed. Next is, what things need to be documented by the reviewer? First, whether in this particular assignment system of quality control, the firm's system of quality control was fully complied with. Then whether significant judgments and conclusions were appropriate. Then there are a statement that there are no unresolved matters. All the matters which he's aware about are resolved. There are no unresolved matters. Then engagement quality control review was completed before the audit report is signed. And finally, so these things need to be documented, whether there was a full compliance, point number 1, and then point number 2A, whether the appropriateness of judgments and conclusion, no unresolved matters, 2B, and then 2C is completion. Then difference of opinion, that's fine. Difference of opinion can come within the team members and within the team and the team and consultant, or with the engagement partner and the engagement quality control reviewer. So there can be difference of opinion. First thing is that now report should be issued only when all the difference of opinion are resolved. Resolution procedure. So firm can give resolution procedure. They can talk about putting it on a piece of paper. They can appoint a mediator. They can go to engagement partner. They can go for voting of the team or voting of the partners. And this is a very important thing for quality assurance. Next is about engagement documentation. Engagement documentation should be completed within 60 days from the date of audit report. If there are multiple reports, each report will be treated as separate engagement and they will get their own 60 days from that particular report. Once documents are assembled and prepared, they should be secured, they should be safe, secured, they should be accessible, retrievable. we should be able to get document whenever we want. Then it should be retained for, there should be policy for retention, and it should not be less than 7 years from the date of audit report. If auditor is signing group's auditor report also, then it should be from the date of group's auditor report. And chartered accountant, auditor will be the owner. It will be up to his discretion whether or not to share this with even client. Monitoring is a simple process in which existing system of quality controlled, it's thoroughly evaluated whether it is properly designed and whether it is operating effectively, achieving its objectives. So it is re-evaluating your system of quality control. Now, for this, there should be appointment of partner or equally qualified partner, or just an equally qualified individual should be appointed to supervise the monitoring process. In this, it's very important to see what are the complaints, what kind of complaints are made with respect to quality control system from within or outside. It should be clearly studied because a lot of deficiencies will be known because of that. Finally, take the actions. If system has some deficiencies, new procedures and policies can be made to remove those deficiencies. If someone is not complying with the system, the person can be disciplinary action can be taken against that particular person and punishment can be given. What about complaints and allegation? Complaints and allegations can be from within the entity, within the firm or outside the firm. In fact, there should be proper channels established, proper email IDs, phone number, and people to whom complaints and allegations can be sent. Next step, whenever a complaint and allegation comes, thorough investigation should be done with respect to them. That what are the complaints, allegation, who has done it, what is the basis, and is it the truth, whether the firm has really done something wrong, and then action should be taken. If there's some deficiency in the system, it should be improved. If someone is not complying with the quality control system, the person should be punished. There should be documentation how each and every complaint allegation was dealt with. In small firms, it is difficult to have their own system for handling complaints, so they can take help of external individuals. Now, when it comes to SA 220, it's modeled completely on SQC1. It says that engagement partner should take ultimate responsibility to implement firm level quality control system to assignment level. Even the engagement team is responsible to understand firm level quality control systems and to ensure they're implemented, but the ultimate responsibility is partners. So, including even the independence. When we talk about implementation, independence is part of it. So, SA 220 is all about implementing firm level quality control system. It is about implementation. SQC1 is about formulating the system, and SA 220 is about implementing the system. When we talk about objectives of SA 220, they are very straightforward. Ensure quality audit. That means audit work should be as per law, rules, regulations, regulations, and professional and technical standards. And find the report. Finally, the report which is given, should be appropriate in the given circumstances. Now, it is focusing on the same 6 elements. It is focusing on the same 6 elements, the elements on which SQC1 is modeled. Now let's talk about leadership responsibility for the first is leader. Again, leader is supposed to set priority, tell to everyone that quality is not negotiable, it is the priority, it should be done irrespective of the cost, profits, and other constraints. And for that, everyone, including engagement partner, should follow quality control system, so that the result is that there is a compliance. When we do audit work, it's compliant with law, rules, regulations, and professional technical standards. Reports we are obtaining are appropriate, reliable in the given circumstances. To ensure these things happen, the third point is open communication. Encourage free, frank, open communication. If any team member is having any concern about the quality issues, they should be able to tell it openly so that corrective action can be taken. When it comes to ethical requirements, yes, it is responsibility of the engagement partner to ensure ethical requirements and independence are complied with. So they are supposed to collect information, they are supposed to identify threats, collect information and identify threats. What are the threats? Then after identifying, they are supposed to evaluate the threats. What are the level of the threats? They are supposed to implement safeguard and to control the level of threats. Okay, control the level of threats, and then they are supposed to take appropriate action. It is possible that appropriate action, it is possible that some team members are changed or we are withdrawing from the assignment, and the whole thing should be reported to appropriate person in the firm. They should be aware what ethical and independence issues are happening. When it comes to acceptance and continuance on same line, first of all, obtain all the information possible, all the information with respect to the prospective client or assignment. Then check the integrity of the promoters, owners, management. Check whether you are having competence, capability to deliver, to do this assignment. See whether you will be able to do the things ethically, whether you will be able to fulfill ethical requirements. And finally, pay special attention to significant matters which occurred in the previous engagement and current engagement, whether they are indicating something grossly wrong with the assignment with the management. When it comes to assignment of engagement team, depending on the nature of the assignment and requirement, adequate number of people with proper competence and capability should be allocated to the particular assignment so as to ensure two things: that work is done as per law, rules, regulations, professional technical standards, and appropriate report is made. When it comes to engagement performance, it's same. Their first direction should be given by engagement partner, key team members. Then when juniors work, proper adequate supervision should be done. When they are stuck in complicated issues, consultation should be given. When they complete the work of the junior should be reviewed by the seniors. Then should be reviewed by the seniors. Then ensure that proper in engagement performance, they ensure that proper report is prepared. After doing all these things, that proper report is prepared to express the opinion. So these things need to be checked. Then we talk about EQCR. So first is partner's responsibility, then it is reviewer's responsibility, and then what additional thing should be done in case of audit of listed company. Partner is responsible. Partner is responsible for three things. Number one, he is supposed to ensure that appointment is done. He is supposed to ensure that appointment is done of engagement reviewer. He is supposed to ensure proper engagement reviewer is appointed. After appointment, he should go and discuss all the significant matters which arise during the course of audit with the engagement partner. All significant matters. And third, not supposed to sign the audit report till the time engagement quality control review is over. What is responsibility of the reviewer? First, go and ask and discuss significant matters which arise during the course of the audit. Understand the areas where significant judgments were taken, whether it is audit risk, whether to rely on internal auditor, and so on, all the significant judgments. Then finally, review financial statements and audit report, and where the final conclusion in the opinion is appropriate. When it comes to listed companies, some additional things need to be seen. CID, whether when complicated, difficult matters, proper consultants were appointed, proper discussion was done, or appointments, proper discussions were done, and whether their advisory was followed. Whether engagement partner and the team were independent. If there were independence issues, whether they were resolved. Whether proper documents whether the documents were prepared for all the significant judgments and whether these documents reflect the actual audit procedure which were performed. So we are going to check reliability of documents also, or reliability of audit documentation. If there's the next is difference. If there's a difference of opinion, it should be resolved before signing the audit report, and firm's audit procedure should be followed. Firm's resolution procedure should be followed. When it comes to monitoring, it's the same discussion that monitoring is a very important exercise where we carefully evaluate existing system of quality control policies. Is it well designed, and is it whether people understand it and whether they are operating effectively and achieving the desired results. Purpose is okay, and that's important because then only will be able to maintain quality. Partners' responsibility. So whenever monitoring happens, partners may be given instruction that you need to change something, you need to change the way you audit. So follow those instructions. Always see the latest advisory out of monitoring process and see if there are deficiencies, they are properly managed in his particular audit assignment. So he's supposed to listen to instructions given to him, he's supposed to see latest updates, and he's supposed to ensure that deficiencies are properly covered. When it comes to documentation, you document about each element, about ethical requirements, independence, acceptance, consultation, EQCR, its timing, statement by the reviewer that whatever matters I came across, none of the matters are unresolved. Okay. Then what is the difference between SQC1 and SA220? SQC1 is applicable to all assurance and related assignments. SA220 is only audit of historical information. When it comes to SQC1, it is responsibility of CEO and managing partners to establish quality control procedures. But when it comes to SA220, it is responsibility of engagement partner to implement it. Now, when we talk about purpose, SQC1 is to establish firm level quality control systems, and SA220 talks about its implementation. So one is about establishment and one is about implementation. One is to ensure quality control system is there, and one simply relies on that system and implements it. To check quality, we have three entities, three authorities. We have peer review board, we have quality review board, we have NFRA. So peer review board is established and controlled by the CA Institute. So they go to CA firms and they see whether there's a proper quality control system, it is being followed, and assignments are done as per that, and it should be apparent in their records. And to check whether the work is done as per law, rules, regulations, professional technical standards, whether the report is appropriate. If everything is appropriate, people will get peer review certificate. If it's not appropriate, they will be given time to improve upon things, and then follow-up review will be done. And if then things are proper, they will be given peer review certificate. Quality review board is established by central government. It is controlled by central government. It is having members from council also. Now their objective is to see what is the quality of services given by chartered accountants, and then give recommendation to CA Institute what new things they should do to improve quality. Give guidance to chartered accountant what they should do. And to do this review, they take help of technical reviewers. They're well qualified, knowledgeable, well trained technical reviewers which do the review as per the procedures issued by Quality Review Board. Then we have NFRA, National Financial Reporting Authority, which is incorporated under section 132 subsection 1. Again, their ultimate objective is to see quality of services given by professionals. The quality of services given a professional, they focus on two things: whether in big companies proper accounting and proper auditing is happening, whether proper accounting standards are being followed and proper auditing standards are being followed. NFRA is made for big companies. So there is a rule 3 which gives criteria. There is a listing criteria, there is a paid up capital criteria, and so on. So big companies are covered in NFRA. QRB. So QRB cannot do review of the companies which are covered in NFRA. So they have to do a review of other companies. But if NFRA chooses to refer it to QRB, then QRB can review it. They cannot directly go to the big companies. Core audit process. So the complete audit process can be divided into 5 phases. First is initial phase, then we have planning phase, then we have execution phase. After execution, we have reporting phase, and finally, we have some other points. So let's discuss first initial phase. So imagine client comes and offers audit. So at reception, we ask 2 things, preconditions, basic conditions. Number 1, are you ready to give it in writing that it is your responsibility to prepare financial statements? And number 2, whether applicable financial reporting framework which you are following is acceptable, is of good quality. If 2 conditions are fulfilled, we ask him to sit down. And then we ask one more thing. Are you planning to put any limitations, that means restrictions, any limitation on scope, that means restrictions on what we are going to check and how we are going to check things? He says, no, we are not planning to put any limitation on scope. We are not planning to put any restrictions of what kind of checking you are going to do. So we ask him, okay, you can go and meet the CA. So he comes and sits in front of the CA. CA says that we will perform preliminary engagement activities and we'll perform 3 things in this. Number one, we will first take all the information. We'll first take all the information and we will think carefully whether to accept the new assignment and whether to continue the old assignment. And if we think it is appropriate, next we'll think what steps will be required to ensure that we remain ethical and independent throughout the audit, like keeping relatives away, etc. Finally, when these 2 things are done, third, we will sign an engagement letter. We'll make an engagement letter. So moment we make an engagement letter, initial phase is over. Then next is we start the planning phase. In planning, first document which is prepared, that is called as audit strategy. Audit strategy. So it is broad guidelines with respect to what should be done and what should not be done. Then on the basis of audit strategy, next thing which is prepared is audit plan. So audit plan is detailed instruction how audit should be conducted. And both these things are updated on regular basis as per new information. The first plan we make is plan of risk assessment procedure. Now, what do you mean by risk assessment procedure? It simply means collecting information and obtaining understanding so that on this basis we can identify the risk, perform the next step. Next step is identify and assessing the risk. From the information which we got, we think what can go wrong and what would be the level of risk. Is it a high level risk, medium level risk, low level risk, or is it a financial statement level risk or an assertion level risk? So this is called identify and assessing the risk. So we collect information in risk assessment procedure and we think what can go wrong and what is the level of the risk, nature of the risk in identifying and assessing the risk. Risk is divided into 2 levels, financial statement level and assertion level. Okay. Now, if we have risk of such a manner that misstatement can happen in any part of the financial statement, it is called financial statement level risk. That means shifting from AS to Ind AS, accounting software is not appropriate, accounts head is not that knowledgeable, management has integrity issues, anywhere things can go wrong. That is a financial statement level risk. And when we know exactly in this financial item, this particular point things will go wrong, that is called assertion level risk. We'll discuss assertion after some time. Now, so moment we decide that there are 2 levels of risk. 2 levels of risk at financial statement level, risk at assertion level. Okay. Then once we get this risk, we go for the next phase, execution phase. Now, for financial statement level risk, we have overall response. Now, what do you mean by overall response? Making team bigger, more seniors, more expert, asking team to remain more alert, increasing the level of professional skepticism, increasing surprise checking. That is called overall response. Now, when we know that risk is in particular financial item, particular point, that is called as assertion level risk. We plan further audit procedures. Further audit procedure is going to include two things. It is going to include two things. It is going to include two things, that is test of controls and substantive procedures. Now, what is test of control? When we go and focus and examine whether procedures which are framed by management, when we go and check internal control systems, are they designed properly? Are they operating effectively? That is called test of controls. Test of control is an intermediary step. If controls are good, we'll have to do less checking ahead. If controls are bad, we'll have to do more checking ahead. The ultimate step is substantive procedure. To substantive procedure means to substantiate. So there are two ways of substantiating. Transaction balances and disclosure in financial statements. There are two ways of checking financial data. One is to sit in the air-conditioned chamber and do a lot of comparison. Compare data and ratios with the previous year with others. That is called analytical procedures. Substantive analytical procedures. Then go to the offices, go to the audit place, and there you start doing inquiry. Then the next is test of details. That means doing inquiry or inspection of the documents or recomputation, recalculation, and so on. That is called test of details. We cannot perform test of details on everything, so we go for sampling. When we check income and expenditure from supporting documents, it is called vouching, because we are checking it from voucher. The purpose of voucher is that people should be able to check transaction with the help of that supporting document. That is vouching. When we check asset and liability, it is called as verification. By performing these procedures, we try to collect sufficient and appropriate audit evidence. We are very intelligent, we take help of others. When we take help of another auditor, that is branch auditor, SA 600 is applicable. We can take help of internal auditor in 610. We can take help of expert in 620. Finally, the last evidence we collect is SA 580, written representation. So we take all the important things which management has said, which management has done in writing. So tomorrow they should not run away from the responsibility. So we take a written representation from them. After getting all the evidence, we finally understand whether there are misstatements. If there are misstatements, we rectify them as per SA 450. Finally, once we ask management to rectify, next step is reporting. Depending on whether management has rectified the misstatements or not, we draft opinion. We frame opinion, draft report. Then we ensure that engagement quality control review is over. Before signing, ensure that quality control review is over, and then finally report is signed. Reporting phase is over, but the work is not done. Once reporting is done, all the files are collated, documents are sorted, they are indexed, they are completed, and they are kept systematically. That is called documentation. Documentation, once everything is done on regular basis, system is analyzed, system is studied, that is monitoring, and completed assignments are checked. That's called inspection. Now, what do you mean by assertion? A very simple meaning of assertion means to say something with confidence. When we say something with a lot of confidence, that is called firmly, that is called assertion. They are also called management assertions. So financial statements are prepared by management. So all the information given through financial statements, whether directly or indirectly, all the information, all the representation through financial, it is called assertions. This is a broad meaning. So all the information which we get directly, indirectly from financial statement is assertion. Now, for specific meaning, there are three types of data. Transactions, balances, and disclosure, TBD. So there are three types of data, and there is a specific meaning. There are three type of data, and there is a specific meaning to it. Let's see. So when we talk about transactions, when we talk about transactions, transaction means income, expenses, cash inflows, outflows. Balances mean assets and liabilities. Disclosure means notes to accounts. Now, let's see. Suppose we have land and building of 100 crores. Now, directly, indirectly, what information we are getting? That this is real land building. It is there. Existence. No land building flat plot is left out. Completeness. Amount is appropriate. Valuation. It is written in our balance sheet. That means we are the owner. Rights and obligation. So these are the four assertions of assets and liabilities. Then P&L sale is 1000 crore. Sales 1000 crore. What it says that this is a real sale. It has occurred. So occurrence. Now no sale is left out. Completeness. Amount is appropriate. Accuracy. It is properly classified capital or versus revenue, and revenue proper department and proper product. So classification. Then sale of current year has not gone to next year. Next year sale has not come to current year. That is called cutoff. Classification cutoff. So in balance sheet there is one special, that is rights and obligation, here two special, classification cutoff. And then assertions of notes to accounts are on same lines, similar lines.